Know your numbers, they say. Well, in this video, I'm going to show you why knowing your numbers really does mean more money in your pockets. As a business accountant, my team and I help business owners all day long along their journey. Now, it's often said, know your numbers. People say it all the time, but what does that mean? Well, in this series of videos, we're taking you through and showing you how practically that impacts on your business. So in this one, I want to show you a tip around gross profit margins. Now, don't switch off. It's not boring. I swear to you, it's the reason why I got involved, or one of the reasons I got involved with this profession many years ago. It certainly wasn't the idea of filling out tax returns, I can tell you that, was because it does have an impact on your business. As a businessman myself in those days, and still now, I still look at these figures all the time. It's having a look at what can you do to increase your profits. Now, whether that's you want to take more money, you want a better lifestyle, you want freedom, you want your business to be more stable, which I know is a lot of people, especially in the early days, goal, we can show you how to do this without selling anything more, by concentrating and honing these figures. So make sure to stay to the end so you can see the journey of how to use these gross profit margins and these figures to make that money. So before we get into the actual meat and bones of the wizardry around how to increase your profits, what I wanted to do was just show you the profit and loss report and a very quick explanation. Now, there's a full video on this already on the channel, but just as a recap, the profit and loss report is a report that shows the profits you make on paper. So it's got nothing really to do with cash. Sometimes it will have a reflection and impact on the cash, of course, but it doesn't directly relate it. So in this example, you haven't really got £29,000 of cash in your bank. And for reasons that are in the video, we talk about that, but it's just something to understand from the beginning that we're looking at on paper as a model. In theory, this is the money you're making. And accounting software will be able to show you this. So if you've got a Xero, QuickBooks, Free Agent, all these pieces of software and your bookkeeping's nice and up to date, there's going to be some amazing data that you can get right now about your business at the click of a fingertip. And it will show you something like this. This one's actually printed off of the demo company on Xero and changed around. And as a result, you can then do things like what I'm about to show you. So what we're going to concentrate today, because this for me is where the wizardry happens, and that's around your gross profits. So there's lots of ways of increasing your profit right down the bottom here, which is ultimately what you want to do if you're looking to take more money yourself, for example, as an owner, or you're looking to build a business and you want to make sure it's generating enough profits. That's the thing we've got to improve. Now, there's lots of different drivers. Business coaches will tell you, there's probably 5 or 7, depending who you listen to, around key performance indicators that will help you to drive that growth forward. But here, I'm just here to talk to you about the accounting wizardry part of it, and that's the gross profit. That's the thing I want to concentrate on right now. So this profit and loss report is a great tool for being able to play around with margins. And for me, it's one of the most exciting and coolest things with what we do as accountants that we can do, is playing around with numbers, the what ifs, the what if we did this and the what if we did that. And I want to show you what an amazing power this can be if you just increase everything for like even 1%, and I'm going to show you. So let's have a quick look. So obviously this is going to tell you what sales you're doing right now, and it's telling you what the cost of your product is. So let's just presume you're selling a product. That's what it's cost to actually get it in and get it delivered and produced to the customer or client, and that's what you've taken in as a result. So none of this has got VAT included, and I've actually chose a limit around 85,000 anyway, just to take that completely out of the equation. So you can see here that it's a reasonably nice business, nice little profit there, fine. So instantly, when we're talking about making more money, the first thing you can say is, well, I want to sell more, but I want to show you why you don't necessarily need to do anything more in terms of business to make more money on here. So let's go. So margins. The first thing I want to talk to you about is the gross profit margin. And for me, it's probably the most important figure when you're looking at improving your profits. And just to recap on what gross profit is, you can see here, it's what you make after the actual product. So if you did a service, this might be the things that it costs to deliver that service. So if you've got staff, so for an accountancy, for example, our accounting staff that are physically doing it, they would be up here as a cost. So because they're our thing that we sell. In this particular business, this could be chairs, for example, and actually that's what it's costing wood and metal and things to make them. And that's what we've made after here. After our 85,000 sales have come in and we've paid all our suppliers, that in theory is what we're left with. Now, this figure is brilliant. This is a gross profit margin. So all you do to get this figure is you take this 46,500, stick it in your calculator, press the divide button, and put 85,000 in, and it gives you a percentage. Now, the great thing about that is that what it enables you to do is use that figure to put it against any figure you put in up here and times it by this, and it will give you what you're going to make. So you don't actually need to know any of this. Once you've established that's what you normally make afterwards, you can just put it in. So to give you an example here, let's say that we actually wanted to improve this. So we've stripped away here what it actually costs, because it's not relevant. We already know now that we're making about 54% margin. So 85 grand times 54.71% is 46,500. So what we can then do is say, okay, well, what happens then? What happens if I then go and I look to increase it? I knock it up to 55% or 55.71, so we can do the 4%. You can see it's increased our gross profit here, and none of these overheads have changed. So actually, we've made more money. We've made £854 more in this year just by increasing that gross profit margin 1%. So the question would be, how do we increase the gross profit margin? In this particular example, there's a couple of ways of doing it. We can either reduce the amount it costs to make the product. That might be possible. You might be able to buy in bulk and it'd be cheaper. You might be able to go and hunt around and get a cheaper supplier without affecting your quality, or if it does affect your quality to a point that no one really notices and it's still sustainable at the price you're selling it for. Or alternatively, and this one's quite often the answer, is look at what you're actually charging for it. Can you increase the price? And I think at a later date we will do a video showing the price increase, because I think one of the things people worry about with price is, well, if I increase my price, I'm going to lose customers. And whilst experience tells me in the majority that's not actually true, what you'll be able to see through using these tools and these numbers, actually, a lot of the time, even if you lost clients, you still make more money for doing less. So we'll talk about that in a minute. So let's have a look. So yeah, if you could actually improve this by, let's say, 5%, you've made 4 grand extra just by increasing that by a little 5%. So let's take that through. So let's have a look at your costs of goods. So what we can see here on this particular sheet is I've put the purchases back in, so you can see here what we're going to do. So in order to, I suppose it's helping you to picture this. If you were going to do it by 5%, so let's do your 5% here, you actually need to reduce your costs by about £4,000. That's a fairly hefty reduction depending on what you sell, but at least you know what the goal is. You know you need to get it down by this. I quite like dividing it monthly, so I might even look at, okay, let's have a look at it monthly. But if you're selling goods, you might well go down to per unit. You know, you might be able to figure out, you know, dividing the numbers actually. At the minute we're paying £1.50 for something. If we paid £1.30, if we paid £1.20, what does that look like? And you're able to play around with it and move those figures around. So as you can see, to get that 1% that we were talking about at 55.71, that £854 reduction in purchases hits straight to our bottom line. So that's one way of looking at that. The other way you can do it, because actually this one's far easier in your control, this is going to take some work. And don't get me wrong, increasing your price can take some work if you've got to explain it to your customers, change all your brochures, all this kind of stuff. However, often it's a little bit of an easier one. So if we were to increase the price in this example, and we're going to increase it very slightly, we're going to increase it again by 1%. So if we were to increase it by 1%, you can see £850 extra and £850 increase straight on there. So it's pretty good. So if we just look back at what we did there, you can see £854 by reducing this by 1%. And again, you can play around with the figures, but £850 just by putting our prices up. If we were to put them up 3%, yeah, it's £2.5 grand. 3% is not massive. And you might find, depending on the size of your ticket item, how much you're selling one particular product or service for, 3% is not that difficult to do. If you're high volume, putting it up by 3% might not make that much of a difference to you, but it really does impact. And I found over years of working with clients, people, when they realise, actually, do you know what, it going up by 3% is not going to cost me customers, you can really see the impact on someone's business. And of course, you can do a combo. You really can do a combo. So this has given us a 56% by putting it up a few percent in the sales. So you can see it does change it. But the power really is if you can do both. If you can change the purchases and you can change the sale price at once, you can really increase that. You know, if you did this example and you were able to make, you were able to drop your costs by say £1,700 there, so you drop your cost by £1,700 and then you're able to increase your sales price by £3 grand, you'd have a really good increase down here, you know, this and the other one together. So, and if you do that across the business, so then you can then look at your overheads and you can say, okay, now this one, I think as accountants, people often come to us and say, oh, where can I cut my costs? Sometimes you can't. Actually, more often than not, the answer is increase up here, increase the volume you're doing, or increase the actual price that you're charging. Cutting the costs tend to be quite difficult. This is intangible. This is a made-up figure. And I know that sounds funny because there are market prices. You know, you can't charge, well, you probably can charge £400 for a haircut, for example, but quite often they're more malleable. You can move them around a bit. You know, if you can demonstrate value in your business and your brand, that price, think of an iPhone, for example, comparable technology is vastly cheaper, but we all pay, well, I do anyway, pay for a nice iPhone because you like it. You like the brand, you like the service that comes with it, you like the feel of it in your hands. There's lots of intangibles that go with that allow them to charge that. Actually haggling with your supplier to can you get it cheaper can be difficult, but it's not unachievable at all. We see this in a lot of manufacturing businesses where if they buy in higher quantity or they start to buy in such quantity, they're in a position with the supplier to negotiate, that can be done. And then of course, yeah, you can look at your overheads here and just have a look at what can potentially be cut. And again, quite often, it's a bit like if you ever tried to do it with your home cost in your house. There's only so much you can cut before you just can't do any more. You know, you can't not have electric to power your house, those kind of things. And in here, you might be able to find some, you know, in software subscriptions, or you can find a cheaper stationary supplier, or you could switch your card machine to a different provider, or you could switch your printer, if you're still printing a lot, to a lease instead of an inkjet that's costing you a fortune. There are things you can do, but again, look for 1%. If you do 1% of nearly everything here, 1% on your price, you're making a lot more money and you've done no more business. You have no more staff, you have no more stress, you have no more workload, and you're increasing your profits. So they're the type of things that I want you to think about when you're playing around with figures. And for me, that's the magic in figures. Obviously, you've got to go and do the hard work that comes after it, but looking at these things is a really important thing. So if you haven't done it, do it now. Don't think about, oh yeah, I'll do that next week, because you won't do it. You're busy, you're grinding, you don't want to be doing it. Go do it now. And if you have done it and it's made a difference to you, please do make sure you let us know in the comments. I'd love to see how you got on with that. So that's it. That's it. So remember, if you're interested in this kind of stuff, subscribe to the channel, look up more videos in the Know Your Numbers series, and of course, share it with your network and your friends, and we'll see you on the next one.